Gold stocks have delivered a large portion of the returns on the TSX so far this year. For more on where things are going for the Canadian index, we bring in Som Seif. He's founder and CEO of Purpose Investments. Thanks for joining us today.
Great to be here.
What do you think of where gold is going to go move forward? I mean, some of this is caused by Washington itself saying we are putting tariffs on everything and people are worried about that. So if some of that gets unwound or resolved, where do you see gold moving forward?
Well, I think there's two components. You have to separate out gold, the commodity, and gold, the companies, like the stocks that basically generate the returns and spreads on mining gold and producing it and selling it. You know, gold has had a great run because of the inflationary risks, the geopolitical risks, the currency risks, all those types of, call it, things that's generally set up well for stores of value outside of fiat currencies. And we've seen that. We've seen a little bit of a cooling off, as you know, in the last like 30 days or so in gold, just settling out, and it's off
with
the
the
tides.
pause of the tariffs, et cetera.
But the companies, the gold companies, have actually had a great run and continued run. And that's because gold doesn't actually have to move up substantially from here for the companies to make a very healthy profit in mining gold and selling it to the marketplace. And so what you're seeing now is that sort of leveraged kind of opportunity on the operating side of this high commodity price. And that actually can persist even if gold stayed flat for some period, regardless of if we see a directional move up or down, you know, meaningfully. I think the big question is actually, where does gold go from here? And so I actually think that, like, we are bullish on gold. We think gold ultimately has continued, call it, risk reasons for it to be a core asset and in demand, and supply and demand is a key driver of gold prices. And that actually will likely mean that gold, you know, I think over the rest of the year and into next year, could be higher than where it is today. And that would play well for gold stocks and the businesses themselves. So I actually think that the companies themselves are in a really enviable position. And it's in that, call it, early stage of the cycle where the companies will ultimately mine a significant spread on the price versus the, call it, input costs of extraction and selling.
Got it. Okay, let's talk about earnings seasons as well. We had TD Bank reporting last week, but it's in a very specific category because it's coming back from something at the end of last year, right? It had more room to grow, let's say, than some of the other banks because of that gap. Where do you see some of the other banks reporting? Where do you see forward looking for the Canadian economy on this?
Well, I mean, so far TD is the only bank that's reported, yes. and you know, just, you know, sometimes not disappointing everybody gets you into a better place. So it's disappointed people for a while now, and I think we all have sort of seen how its underperformance has impacted its stock price in a meaningful way. On that side, I mean, the markets had really beaten it up with a prove it to me before we, you know, get you the, call it, multiple that we're giving other banks. And that's sort of what this has been. It's up 25% year to date. It reported relatively impressive returns because, you know, across all of its segments, it was positive. I think as we go into, you know, the next number of banks reporting, they're not going to have as much of a, you know, give me. They have to prove some things. I think PCLs is going to be a big thing. So, you know, are they ultimately seeing increased losses in their loan books? You know, given the, call it, geopolitical environment, the economic, you know, environment, the Canadian market, the U.S. market, things like that. I think the second is, you know, what are we seeing in terms of, you know, call it, their ability to, and willingness to lend in this environment? Those are going to be the key things we're going to be looking for. And then finally, I think, you know, are they winning across the book? You know, not just in Canada, but in the United States. How's their U.S. businesses doing? These are all things that they're going to be paying attention to. I would say one of the really insightful things is going to be, how are the banks dealing with, or what are they seeing in the data based on, you know, consumer behavior, you know, economic behavior, corporate behavior, given the tariffs that have been sort of threatened and all the different changes, not only here in Canada, but globally. And it'll be interesting insights to get, you know, are they seeing this actually impact the behaviors of how CEOs are acting today, how individuals are acting today. So it's going to be an interesting thing. Banks have done well so far. TD, of course, has done very well, mainly off that low. But I think the rest of the banks have an opportunity to do well, but not like what we've seen in TD.
Those are investing in bond. Where do you go? Where do you go today? Again, the uncertainty is sort of fueled through everything. I'm just wondering what your advice would be.
Well, look, the bond market has been in a secular bear market since 2022. I mean, effectively, as soon as we went off our really, you know, structural lows and into an inflationary environment and rising rate environment, bonds have been a bad place to be. And what I always go back to is, what are the things that drive you to be an owner of an asset, right? If you are, you know, bonds ultimately are strong and attractive assets when interest rates are secularly declining or where they're steady. You know, if you're at high rates and they're steady and you can generate a nice return. When you go through a period where we're seeing significant volatility due to the uncertainty, both directionally on inflation, deflation, interest rates, geopoliticals, currencies. It's a really risky asset for what is a very marginally small return. And so my view is that bonds are not a really great asset right now, especially in the, call it, fixed income, high grade, whether it's governments or high grade corporates. Anything with duration right now makes no sense, in my opinion. The only reason you'd own something that the duration, like a longer term on it, is if you felt we were going into a highly deflationary environment. And really, outside of AI, which could be a very deflationary, call it, activity, and innovation, it's not strong enough to offset all of the short-term and medium-term issues around geopolitical risks and inflationary pressures around spending and all the other things. So my view is bonds are a very tricky asset to own. If you're going to own them, you want to own them on a very, very short duration, or cash-like or short duration. And you probably want to, if I'm going to go into things, I would actually go into credit more than I would go into, call it, governments. I wouldn't own treasuries or Canadian governments right now. And frankly, I don't think many other people are either. I
do want to just get your quick take on digital assets as well. Bitcoin hit a record last week. Where do you stand on sort of digital assets and investing in that front?
Well, first and foremost, digital assets, we're a big, organization that has been very bullish on this. I've, had a deep thesis on this for a long time. And, as an organization, we've led the way in providing access to them. We continue to see what we've always believed is going to be a continued movement from fringe asset to core holding. And we're seeing that more and more, I think in the movements that we've seen specifically, and you have to differentiate between each of them, but Bitcoin specifically, it is, in the same reasons as we talked about with gold, it is becoming more and more of an asset that people are looking at as a offset against where do I put my money in such a, call it multivariable risky environment. And I think Bitcoin is taking a large part of that, not just in developed economies, but globally. And I think that is what you're seeing, and along with, more and more portfolio investors allocating to to Bitcoin. I think on some of the other digital assets, I think they're just seeing a large part of the same development. You saw a really interesting thing in the United States around stablecoin and legislation in last week. That's all net positive for things like Ethereum and Solana and other things like that.
Got it. Som, I've got to leave it there with you, but thanks for coming in. Som is CEO of Purpose Investments.
Great.